Opening range is a concept which is very basic and easy to understand, yet so many people do not know about it. It is one of the purest form of price action and works in literally every asset class, including the most volatile Bank Nifty. So in this video, we are going to understand what exactly is opening range, how to plot it on charts, and how we can use it in our trading. So make sure to stick with me until the end and show some support by subscribing to the channel. Hey guys, welcome back to the channel. This is Shrish here from Trading Explained, and without any further ado, let's begin. So opening range basically means plotting the range of volatility of the very early morning session. And because FIIs and DIIs are making positions in that session, these levels hold significant importance. So now let's understand how to mark the opening range. So let's say the time is 9:15 AM. The markets have just begun and the first candle is in formation. Sometime later, the first candle ends up as a red candle. So let me just draw a red candle over here. And now to mark the opening range, we need to identify the highest and the lowest point of this first candle. So as you can clearly see, the highest point is this, while the lowest point stands over here. And this is what we call opening range. This is our opening range as of now. Okay, because there's only one candle, this is our opening range. Let's see what the market brings to us. Second candle opens over here because the first candle closed over here. Second candle opens over here. It goes down. It breaks the low of the first candle, which means the range is now extending. It goes down, but then bulls come in and they push the markets up, and this candle now goes up, closes as a green candle. So now what happened over here is the range got extended on the lower side but not on the higher side, because the second candle did not break this particular high. The higher side has not been extended while the lower side is extended. So now our opening range becomes this. Why? Because the highest point of that range and the lowest point of that range. Because the low got extended, the range got extended as well. If this candle had went above the high of this candle, then our OR would have extended on the higher end as well, but that did not happen. So as of now, this is our OR. Okay, so now the second candle has closed over here, so the third candle would begin somewhere over there only. So the third candle opens over here, goes down and closes as a big red candle. Okay, so now as you can see, again the opening range got extended on the lower side. Okay, this high has not broke the first candle's high or the opening range high, so that is why it is not getting extended on the higher end, but it went below this second candle's low, which means the opening range again got extended on the lower side, and now this is our OR. Why? The highest point of that range and the lowest point of that range. And now let's say the fourth candle opens over here, closes as a big green candle with a bare minimum wick on both ends, and now this fourth candle is not extending the OR anymore. This fourth candle is not breaking the low of this range. It's not breaking the low of the previous candle, neither it's breaking the high of the opening range. So at this point we can say our opening range or OR is complete. Okay, so at this point our opening range is complete. Why? Because there is no more extension from the market. Until the market was extending the range, we were extending the opening range as well. But now the market gave a inside candle. This is what we call an inside candle. Why inside? Because that candle closed inside the range of the opening range. So this is a inside candle. And when we get an inside candle, that is when our opening range gets completed. So this was an inside candle and our OR or opening range got completed over here. Let's see another example. So again, let's say it's 9:15 AM, it's the market open and the first candle is in formation. Just that this time around the first candle is a green candle. So where is our opening range going to be? You got it right. Our opening range is going to be the lowest point of this candle and the highest point of this candle as of now, right? Let's see what market does next. So the second candle opens over here, makes a slight low, then goes up and closes over here. So now if you carefully observe, this second candle is not breaching the low of the first candle. The first candle's low is over here. It is not breaching the low of the first candle, but it is breaching the high of the first candle. Okay. So now what is happening over here is the range is getting extended, and because the range is getting extended, we need to extend our OR as well. So what was our OR until now? It was this, the first candle's high and low, but now because the range is getting extended on the higher side, we need to extend our OR over here, which is the high of the second candle. Getting my point? Okay, so the third candle opens over here and closes as a big red candle, but this candle does not extend the range any further on the higher side or on the lower side, which means this is an inside candle, right? So this means that now our opening range is complete. Why it is complete? Because it is not breaching the opening range on the higher side or on the lower side. If it had broken this range on either side, we would have extended this range on that particular side. So let's say, for example purposes, if this red candle came and broke the low of the first candle, so we would have extended our OR to the low of the third candle, which is over here. But that did not happen. This candle closed as a candle which did not give any further extensions, which means this became an inside candle, and now our opening range is complete. I hope you are understanding the concept of opening range. We basically have to extend the opening range until we get an inside candle. And what is an inside candle? Inside candle basically is any candle that does not extend the range of the opening range. Okay, it basically means any candle that closes inside, completely closes inside, and the high and lowest point needs to be the inside of the opening range. So the high and low point are inside of the opening range, therefore we call it an inside candle. Getting my point? So now let's see practical example, and now I'm going to show you example of Bank Nifty. Okay, here we are with our Bank Nifty chart. Over here I am using 5 minutes as time frame, and I am not using any technical indicators, because I believe in opening range you can find the purest form of price action, mainly because the levels are derived from the FIIs and the DIIs itself, because they are the ones who trade in this very early morning session. So focus on the right most side of the chart, because that is where the new day is beginning, that is where the 9:15 AM is. And now let's see where our opening range is. So for this first green candle, let's mark our opening range, the lowest point and the highest point. Let's see what market does next. Okay, so now as you can see, the second candle extended the OR on the higher side but did not extend it on the lower side. As you can see, the low of the second candle is not breaching the low of the first candle, therefore it will only get extended on the higher end. So this becomes our OR. Getting it? It's easy, right? Let's see the third candle. Okay, so third candle again is extending the high of the second candle but not extending the low of the second candle, which means our OR will only get extended on the higher side. So this is our opening range as of now. Let's see the fourth candle. Okay, so the fourth candle is also extending the OR. So what you will do? Will you extend? Yes, you will, because it is not upon the number of candles, it is upon the extension of the range. Alrighty, let's see the fifth candle. Oh, okay, so now the fifth candle is not extending the range anymore. As you can see, the fifth candle is closing completely, the high and low point is completely inside the opening range, which means this is an inside candle, and now our opening range is complete. Getting it? See the illustration over here, and then you can see how it works in real markets. That is why I have kept this split screen over here. So now let's go and see the full chart. Okay, so the opening range is now complete, and now you will see how this opening range high, this is our opening range high and this is our opening range low, and you will see how it works in live markets also, how it works in such volatile instrument like Bank Nifty. Okay, so the market got rejected from the opening range high level itself. Okay, once the OR is marked, it acts as a resistance, and as you can see, the resistance came from the opening range high itself. Then the markets went down. Okay, and then it took support on the opening range low again. So now you will understand the importance of this opening range thing. Rejection came off the same level, the opening range high, the support is being taken at the same level, and now you will feel how do people like professional people take out levels, how do they tell you that okay, this is the exact level where the support is going to be. So this is how they come to know about these levels, and to be very honest, this is just one of the many methods of price action that works into markets. And if you want to know the rest of the methods as well, then you need to subscribe to this channel, because the content is going to be on this channel very soon, so make sure to subscribe. Okay, so let's see what happens next. So first of all, market took resistance at the OR high, and then it took support at the OR low, and now we will see what happens next. So once it broke below the OR low, as you can see over here, it broke below the OR low at this point. So what happens is, whenever any support is breached, it turns out to be a resistance for the market in the upcoming time. So let's see if that can happen over here. So this is what we call an OR low breakdown, or opening range low breakdown. So this is an opening range low breakdown. Market retraces back and see where it is taking the resistance. It is not magic, it is just technical analysis. It is just good technical analysis. This was our opening range, which got broken down, which is now acting as a resistance. Pure magic. And this is Bank Nifty. Like, this is the most volatile instrument available in India. It is not some stock. It is Bank Nifty. It is an instrument where people fear to trade this, and it is working on instrument like this. So you can just imagine how useful it will be if you use it in cash market or commodity market or stuff like that. You know, to be very honest, in commodities market it won't work because the opening range is so bad, there's no volume and stuff, but in cash market it will just work very well. Okay, so now let's see what happens next. Rejection came off again. Market at the end also almost tried to break it but could not. The rejection came off again at the same levels. So this is how opening range can help you identify what the trend is, identify if you are, whether or not you are right on the right track, or whether or not you are against the market, or you will basically come to know whatever you are doing. If you are doing the right thing, the market will tell you, like if the market is below the opening range low, you shouldn't be having any longs at that particular point of time. That is basically what market is trying to tell, because if the market is below the opening range low, that means the bears are in control and they will not allow the market to go up very easily. Similarly, if the market is above the opening range high, it means that the bulls are in control and the market won't allow to bears to take control so easily. So if it is, it basically gives you signals in the form of price action, and if you could understand that, then your trading would become at least 10 times better, because you would be able to understand markets in a much better way. So I hope you enjoyed this video. I hope you liked this video. I hope you learned something out of this video, and if you did, then make sure to smash the like button and subscribe to the channel, because I keep coming back with such content that revolves around trading, trading psychology, trading success. Everything that you need to know about trading you will find on this channel. So make sure to subscribe. I will see you in the next one. Until then, you guys take care. Bye bye. Peace out.